Welcome everyone. So after all, what's my XRP price prediction? How high will XRP price reach in the next bull run? Or what will be XRP's price once the utility market is fully implemented? Without any doubts, this is the question I receive more than every other question combined. And to be honest, most people expect me to answer with a very precise number just because that's the culture with digital assets. Everyone wants a target, a deadline, a reassurance that at least anyone out there already knows what will happen in the future. And if you follow my channel, you know I am not a huge fan of making price predictions or actually giving timelines. After years researching this industry, working on a daily basis with XRP, the XRP ledger, I have reached the opposite conclusion. The more deep I went into understanding blockchain technology, the intersection of digital assets and artificial intelligence, the less interested I became in doing price predictions. And if in my earliest years in crypto, all I could think about was price predictions, this mentality has completely changed. My focus completely changed towards understanding which real problems those networks are actually solving, because ultimately this is where long-term valuation comes from. Markets can simply ignore reality for months. We have seen that with XRP before. Sometimes they can ignore reality for years. Eventually, prices become beyond speculation and start catching up with real-world utility. And when that happens, price simply reflects what has already changed in the real world. And here's the big problem. Most investors in the crypto space begin their research by opening charts. All they think about is numbers on a screen, arbitrary lines drawn by arbitrary people in an arbitrary way. This is what technical analysis is about. And this comes from someone that runs a private trading group. Technical analysis is just another piece of the puzzle. You can't base your entire decisions based on technical analysis. I simply pay attention to the macro scenario, the geopolitical tensions, and most importantly, which institutions are adopting the technology and how is going to be the intersection between digital assets and artificial intelligence. And usually those type of developments rarely make exciting headlines. Yet they play a pivotal role to determine where capital flows over the following decades. Every important technological revolution has followed the same pattern. The public attention only arrives after the foundation have already been built. And by the time the average investor becomes comfortable, the greatest opportunities have already disappeared. Consider the internet during the late 1990s. Analysts tried to predict the future value of internet companies based on the information they had at the moment. Their calculations looked reasonable because they were based on the facts they could actually measure. However, at the time, the most valuable information hadn't been created yet. No analyst 40 years ago could accurately predict that most human beings would walk around with one of those in their pockets. So no single analyst included smartphones into those models simply because smartphones barely existed. Nobody could imagine billions of people carrying powerful computers inside their pockets while shopping online throughout every hour of the day. Entire industries emerged that nobody had seriously incorporated into their financial projections. And of course, now that we are in 2026 and everyone has a smartphone, looking backwards, it seems like an obvious mistake. And looking forward, humans usually repeat the same mistakes and the cycle repeats itself. And blockchain technology and XRP adoption is no different. It's actually entering the exact same phase. Most discussions remain trapped inside today's financial system while ignoring the entirely new economic activity these technologies might eventually support. Every year introduces another technological innovation that, looking back just a few years ago, would seem completely impossible. In fact, if I were to be recording this video just 5 years ago, artificial intelligence would barely make any headlines. And nowadays, artificial intelligence is not only reshaping the world's financial landscape, but is also directly intersecting with digital assets. Who would predict 15 years ago that you no longer need a physical wallet? You can just connect your phones to your smartphone and make payments straight there. Each development creates another layer of economic activity. Every additional layer increases demand for infrastructure capable of recording ownership, transferring value, verifying information, and settling transactions securely across different participants. Instead of asking where XRP will be trading next month, I prefer to ask a much more important question. How many economic problems remain unsolved? Cross-border payments remain slow and expensive, collateral remains fragmented, liquidity remains trapped inside the pre-funded accounts, nostro-vostro accounts are costing banks and financial institutions trillions of dollars sitting idle, and financial infrastructure remains extremely underdeveloped considering the technology already available. And before we get back to the video, a quick disclaimer, this is sponsored by FortisX. If you are looking for a platform that allows you to earn rewards with your cryptocurrencies without looking up the assets for months, it is indeed worth it to do your own research on FortisX. What stands out for me is the focus on infrastructure and security. FortisX uses Fireblocks custody technology and highlights security reviews from Certic and Cyberscope. Another feature is flexibility. Instead of long lockup periods, FortisX allows users to maintain access to their assets while earning rewards using the platform. Those rewards are distributed on a daily basis according to the platform terms. As always, remember there are always risks associated with cryptocurrency investments. Returns are not guaranteed and the value of digital assets can fluctuate. Always do your own research before using any platform. Now, if you want to know more details about FortisX, make sure to check the link in the description of this video so you can find out if FortisX is a good fit for you. Remember, this quick integration was sponsored by FortisX. Now let's get back to the video. Each one of those inefficiencies represents demand waiting for a solution. And eventually someone has to capture part of that value. Picture the global financial system as an enormous city that has been expanding continuously for generations. Roads were built decades ago, bridges have become increasingly congested, and millions of people continue traveling through infrastructure designed for a completely different world. Engineers eventually arrive with better materials, stronger designs, and faster construction methods. Nobody will ask what will be the price of concrete after the city finishes expanding. The whole point is understanding how big the city eventually becomes, because that ultimately is going to dictate how much infrastructure is going to be required. Financial infrastructure follows the exact same logic. Every institution connecting to distributed ledger technology expands the network. Every tokenized asset increases activity on the network, and every additional participant expands the liquidity rails. And every successful implementation encourages other financial institutions to join the process because nobody wants to stay connected to obsolete systems. Once enough participants have joined the network, adoption begins accelerating faster than public perception can comfortably process. Human psychology inherently struggles with exponential changes. Our brains expect tomorrow to resemble yesterday with just minor improvements. But history demonstrates something entirely different. Technology eventually reaches an inflection point where gradual progress becomes structural change. And this is the reason I spend more time researching adoption than making price predictions. Because numbers appearing on a screen actually provide interesting information about today's emotions. But institutional behavior provides valuable information about tomorrow's economy. So whenever someone asks me what will be XRP price tomorrow, my attention shifts towards one fundamental question. How much of tomorrow's financial infrastructure has already been built? And until that question is completely answered, every single price prediction will be simply guessing rather than an objective conclusion. If you watch this video until the end, let me know in the comments. I want to know who are the real ones that watch until the end. Thank you, everyone. I'm gonna see you in the next video.